With U.S. sanctions on Iran set to go back into effect Tuesday morning, what will renewed tensions mean for the price of crude oil? Joining us now is Dan Eberhart, CEO of Denver-based oil and gas services firm Canary. Dan, thanks so much for being here today. So Jackie ran through some of these. Absolutely. We have some things that are bearish for the price of oil when it comes to things like the production cuts, at least that were agreed to by OPEC in late June, but then potentially bullish for the price of oil with what's going on with the renewed sanctions or the reignited sanctions against Iran. Obviously, you run an oil services company. What do you think will happen with the price of oil, and how could it benefit you potentially?
Sure. So I think we're going to exit oil around $100 a barrel WTI by the end of the year. I think there's a lot of bullish indicators. You know, I disagree a little bit with what the idea that the Saudis were being cautious. I think they've really overstated the amount of excess production they had. They said they were going to ramp up production both back channel with the U.S. and publicly, and what you saw is the production from June to July fall about 200,000 barrels a day. So I think that they're struggling to ramp up production as much as they promised, and I think you've got to overlay that with pipeline takeaway capacity problems in the Permian, and then falling production in Venezuela, and then falling production in Angola, you know, coupled with synchronized world growth. I think we're in for higher oil prices and higher prices at the pump later in the year.
And then how does Iran play into all of that? I mean, doesn't that also push prices higher if there's sanctions on the exports from Iran oil?
Yeah, sure. So Iran exports kind of between 2.4 and 2.7 million barrels a day of oil. And I think that with the sanctions, you know, the market is expecting about 1 million to 1.5 million barrels a day to be taken off the market. And so I think that's going to further crimp supply. And I think that's just going to lead to more bullish pressure. And I think that a lot of people expected the U.S. to issue a bunch of waivers, and the rhetoric coming out of the Trump administration via the tweets and via the other people in the cabinet, I think just points to it going in the opposite direction. And so I think we have really a recipe for OPEC not being able to supply as much as we thought, pressure from supply in Iran due to sanctions, pressure from Venezuela, and a good economy.
I'm still trying to wrap my head around. You think $100 on WTI by the end of the year? That's a 50% increase from where we are right now.
We should be about $70 a barrel WTI right now, right? So it'd be about a 30% increase. Yeah.
But what I'm getting at is you name all these fundamentals that are going to push it to $100. Why isn't the market going there now if we all know about these fundamentals at this point? What's going to be the catalyst that moves us that much higher from here?
Well, I think there's speculation about what's going to happen with Iran. Is there going to be a meeting? Is there going to be a deal? Is the U.S. going to issue waivers? And I think that as that plays out, I think you'll see the administration seems to be moving towards a more hardline direction. I also think Venezuela is a big unknown. Look, 2 years ago, Venezuelan production was 2.2 million barrels a day. Right now, it's about 1.34, and I think it will end the year somewhere around 1 million barrels a day. So if you have economic growth adding 1 million, 1.2 million barrels a day to the worldwide demand this year, and you have all these supply constraints, and then you have Saudi Arabia sputtering to get to increase supply, you know, just June over July as they promised, I think you have a recipe for a higher oil price.
Dan, very quickly, if we can, we know that you are a big Republican donor. You largely support the Republican Party, but you're not a big fan of tariffs at all. So what does that mean for where you're putting your money? Are you not putting it with the Republican Party as long as the larger group supports this tariff out of the administration?
No, I definitely support the administration in general and support the Republican Party, and I think we've got the best ideas for economic growth and national security and education policy moving forward. I do think that where Trump is on trade is a little bit dicey for the macroeconomy in the short term and for our industry. You know, we have to compete against, in the oil business, compete against OPEC, compete against West Africa. And so just at our company, Canary, we're having to raise prices. You know, a 25% tariff may be a landed cost increase of high 20s or low 30s for us as a business. So we've got to move those price increases along to our customers. So I think it will impact the economy in the short term, but I think it's courageous for Trump to do something that Obama or George W. Bush didn't really handle, which is, you know, China and some of these other countries being hypocrites on trade.